Hey guys, what is going on? It's Simon here from Get Into Crypto. I haven't streamed for a little while, so yeah, this one is a little bit unplanned. I've been pretty busy over the last year, really. Like I've relocated myself to Portugal. I'm actually back in the UK at the moment, but I've just been taking a little bit of time out, doing a bit of traveling. Obviously, very much focusing still on the crypto markets, and just wanted to give a little bit of an update as to my thoughts on the current state of the market, my thoughts on the current drop, and yeah, basically try and sort of address some of the confusion that's going on right now. Because don't get me wrong, the markets have been quite confusing. I think for many of us coming into this year that have been in sort of crypto from the end of the last cycle, whether it's sort of 2017, 2018, we're very much expecting things to kind of line up in a similar way to what they had done back in 2017, to see some sort of run up and then potentially a move coming up sort of up to the 100,000 level. And we haven't quite seen that. And obviously, after we saw this sell off in April and May down to our kind of like summer lows, I think many of us were then looking at 2013 market and saying to ourselves, well, it's gonna be a double pump, a double bubble. We're gonna come off, and then we're gonna sort of march on up, into 100,000, 150, 200,000 K at the end of like 2021, and obviously that didn't quite happen either. So I think I speak for quite a lot of people in the space when I say, the last year was just confusing and was just completely not what anyone was really expecting. Certainly not me anyway. So how does that affect your positioning? Well, you're kind of positioning in. I mean, basically, I took out a little bit on the way up here. I started to get really uncomfortable when we started to break this high, and when we got above 60,000, I was like, look, the market's just going up far too fast. We're gonna end up having a cycle top if we don't sort of cool off a bit. And actually, when we did cool off, albeit we cooled off a lot more than I thought we would, it was kind of in a way relieving because we did need to cool off. So we came down. We sort of based on support on the 50-week MA, and yeah, then we started to take off again. And I think this fake out up here caught a lot of people off guard. And then you say to yourself, well, okay, there's probably going to be some volatility. We're probably not going to break, straight through the all-time highs. So yeah, this was going on. Obviously, markets were talking about like more stimulus due to the new COVID variant. We knew a taper would be coming. We didn't know how fast, how aggressive that taper would be coming. Obviously, the Fed in the past has said interest rate hikes from 2023. And obviously, these got brought forward to 2022 to address inflation. So yeah, right now, I think the fall down to kind of like the low 40s. I very much thought to myself, when we got back above this 50-week MA, we would start to rotate back up towards our highs again, potentially forming some sort of ascending triangle before eventually a breakout to all-time highs earlier this year, and yeah, sort of complete our market cycle there. But I really think what we're looking at now is something different. And for me, we're going through this stage where we're having these corrections, and we're having these run-ups, and then we're having these corrections, like, huge volatility. The market, is shaking a lot of people out. I mean, anybody that's trying to sort of breakout trade this has been absolutely destroyed. And certainly it's very stressful for hodlers, which, if you hodl throughout 2017, you did very, very well. If you basically, bought in 2021 and hodled, then you've not done so well at all. So I mean, let's just actually look back at 2017. I mean, if you bought in at the start of 2017, then you would have done very, very well. took about nearly a 2,000% return. So, you know, yeah, there you go. Obviously, if you've done the same thing in the last year, then well, you know, you basically break even. So, yeah, it's been tough, and I think now what we really need to try and sort out or address is, you know, where do we go from here? We are where we are now. Obviously, a lot of us are thinking to ourselves, look, we're stupid. We should have taken profits. Obviously, hindsight is always 2020. And were there things we could have seen here, signs we could have seen here, which would have suggested that actually we're going to come off? Like, I'm not totally convinced that we could have read into that. I think we probably could have read in better to what the Fed was going to do. We knew the Fed was going to taper. We knew that inflation was becoming a hot political subject, and we knew that there would be pressure on the Federal Reserve to tighten, to go hawkish in terms of their policy. So obviously stop quantitative easing and start to increase interest rates. So, you know, the market is reacting to this. All I will say is that this is a policy shift that is pretty much driving the narrative in the markets right now. You know, you hear these stories about like Russia banning Bitcoin and SEC investigating MicroStrategy's accounting. I mean, they're all nonsense. It's nothing burger. I mean, you know, these stories to be expected. It's your typical FUD. None of that is massively relevant to this market. What's really driving this market is Fed rates, and you know, the correlation to stocks as well. I mean, we're seeing the stock markets dump, and you know, Bitcoin is pretty much trading like a large cap tech stock at the moment. I mean, I think many of us have seen what has happened to Netflix and what has happened to like Peloton and things like this. I mean, looking at some absolutely extraordinary moves to the downside. So, yeah, it's tough right now, and you know, what we really need to determine is what do we do here? You know, do you sell? Do you say to yourself, well, that's it, we're going to go into a bear market over the next year? And where is my... I haven't done this for so long. Okay. Yeah, I can't really find the drawing tool that I want to use. No, I don't think it's the arrows. No, it's not. But anyways, I'll use them. I'll use them. Yeah. So I mean, one possible scenario is we kind of see a move like this back to our 200-week MA, and if we just look at previous all-time high is coming in around 20k. So is the 200-week MA, which is green line. So, you know, one possible scenario is we get something like that. And if we were to do that, it is probable, for me anyway, that we will be in, where is it? That we will kind of be in a zone like this for a while. So we kind of come down here and we're kind of trading a little bit sideways and up. And eventually we might put in a recovery. Now, you know, we're not actually, this is the thing, we're not even that far away from this 200 MA. So it is probable that we do come down here, and I think we would get a big bounce here. You know, if you look at typical stock corrections, they don't last that long. They can last a long time, but you would like to think that the Fed would sort of step in and do something to stop markets from going into like a, should we say, like a year-long bear market. So Yeah, I mean, for me at the moment, this is a this is one possibility that I'm considering, and I'm not saying it's definitely going to happen, but we have to say this is on the table now. It's a lot more likely to happen today than it was, well, even a couple of weeks ago when we were above 40k. Do you know what I mean? Certainly if we take out these lows from the summer, I would say that this target is probable. Um, what else? What else am I seeing right here? Obviously, obviously, I've drawn these channel lines. I think we could be in this ascending channel, and I mean, you know, it, it's just absolutely money machine for the institutions that are able to panic out retail down to the bottom of this channel, who think we're going to go into like a multi-year bear market and then rally us up to the top of the channel. Everybody gets excited. Everyone starts whacking on 100x long, and then come straight back down again. I mean that is so profitable and lucrative for the institutions that are trading this market, because they can just completely reverse trade the emotions of the retail trader. So, for me, I actually think that is probably more likely than coming down here. I think so many people will be looking at this now and saying we might come down here. I think a lot of people will be scared to buy in here and they want to get in for a lower price. And I think the institutions could front run that. So yeah, potentially, and this is the other possibility, which I think is likely, but this comes down to what the Fed does. If the Fed does start to come out with more dovish comments and reverse some of their hawkish remarks, and even suggest that they won't increase rates 4 times this year, I think we could see a pretty sharp snapback in stocks and in Bitcoin. And I just want to bring up a chart of the what should we do? Let's do the Nasdaq. NAS 100. I don't know. Here we go then. Yeah. So that's basically what we saw in 2018, late 2018. The Fed was starting to increase rates. So they've started to tighten the balance sheet and contract. And we saw this sell-off, and we saw a sell-off in the stock markets. The Nasdaq itself came down 23%. The Fed did a U-turn on the rate hikes and said they wouldn't increase rates for the foreseeable. And then we saw like a straight up rip to the upsides, and that's basically 30% back up. And then we actually continued that to go on and put on a 60% gain from low to top before COVID came along. And obviously we all know what happened then. So what I'm trying to say is this was a V-shaped recovery from a environment or from a sell-off that was really instigated by the Federal Reserve. Now, if we look at where we are right now, we can say, well, want a sell-off of 13%. What would be 23%? Well, 21% would be down to the 100-week moving average, okay? Where did we come down last time? We actually went through the 100-week moving average. We thought we were going to find it as support, and we actually went through it. And this is the 200-week moving average that we actually hit on the COVID dump. So, yeah, I mean, we got a long way to go to get down there. But I think something like that is plausible. I mean, if we just look at a fib retracement on this move as well, do we get some confidence there? Well, we're kind of coming back down to the 23 here, but we got the 382 down here. So, potentially the Nasdaq does come all the way down to 13,000. Or if I think it depends what the Fed does, because the Fed's meeting on Wednesday, right? So, if I think the market might chop around this level for a bit, over the next few days. We'll see what the Fed does. I think if the Fed does step in and say they're going to hold off, then we could see something like this in stocks. If not, I think we'll drop down further and we'll see something like that, because I don't see the Fed letting these markets crash lower than this. Personally, you know, history doesn't show us that the Fed just lets the market, completely crash. Maybe we will see a bigger crash at some point if the Fed is forced to go so strong on hawkish policy to fight inflation that they literally have a gun to their head from the US government telling them, look, you need to get on top of inflation. If markets crash. But I don't think that's a mandate, and I don't think they are there yet. I think if they can do both, if they can support the stock market and they can do a little bit of little increase, incremental baby steps, just to try and cool prices a bit, try and cool the inflation rate a little bit, then I think that would be their preferred approach. So I actually think we will see recovery either come in next week or come in a few weeks later. Once we get down to these levels, I think the Fed will know, right, this is really serious. We need to try and step in and support markets. So what does this mean for Bitcoin then? So if they step in next week, or I say if they step in, I mean they're stepping into increased rates, right? I mean if they hold off, if they soften their approach and look to pivot, then I think we could get a bounce here. And obviously I'm enjoying this channel. We've got the support from the summer as well. We've actually got a gap fill as well on the CME prices of around 30, like the low 33s, I think around 33k. So there's a few things that are all lining up around this area. I'm trying to think if we pull this down to 4k, we're not really getting anything from the fibs there. So yeah, I think that is, no one can read what the Fed is going to do. I'd say this has maybe a 40% probability. If they step in later and things get uglier, I think we will come down to the 30k mark, and we still might come down to the 30k mark. I'm not trying to rule that out, but I think if they delay and if they say no, we're going with the rate hikes, we need to attack inflation, and they don't shift their policy at all, then I actually think stocks will fall further and crypto more than likely will come down and test these lows, and it might even spike down to the 200-week MA. So really everything is all eyes on Wednesday. I think whatever happens, I think we'll see some sort of bounce anyway. Like even if they carry on with it, I think we'll see some sort of bounce because markets normally like to react to these decisions by going one way and then turning around, going the other way. So you normally see like a reaction sort of up to a day after the announcement, or sometimes even a few hours after the announcement, to go one way, and then the market will revert for the next few weeks in the other direction. I think that's what we actually saw the last Fed decision, which I think was around here late December, when we actually saw Bitcoin and crypto stocks all get a bid, and then obviously subsequently we came off. So yeah, how I see it, I'd actually say I don't. I actually think they will. They will do something to calm the markets. I actually think this move here maybe it doesn't get that high. Maybe it's more of a move into the low 40s to back test this. Everyone starts to get excited, and we explore these lows a bit more. It all depends what they come out with and what they say. But you know, I think this is the most likely scenario. I'll probably give that a 55, 60% chance of happening. And then from there, I'd say, depending on what they say, there might be a chance that we kind of V rally up here into what is a very key level. Obviously, breaking above here would invalidate this structure, this bearish sort of head and shoulders formation, and we might actually, carry on going. But it all depends what the Fed says. I think we could see quite a fast snapback, but I also think there is the risk if the market's disappointed with what the Fed comes out with, that we do chop around here, go sideways for a bit, and then look to try and recover. But it could be that the Fed comes out, they posture a little bit, don't say enough, and it could be that eventually we do come down to these levels. So, I know I'm not being a lot of use here because I'm literally saying the price could do anything, and it really could do anything. But Wednesday is going to be very, very important for the Fed meeting, and we're really going to have to see what reaction that has from stock markets to kind of gauge what Bitcoin's going to do. Yeah. I mean, they're my thoughts. I don't really have much else to add. Obviously, this 200-week MA is going to come up around the 20,000 level. I'm hoping that'll be the floor to this market, but of course, things are happening that we've never seen before. But I don't really think there's an appetite to send this asset into a multi-month, multi-year bear market. I don't think there's the appetite. I don't think people in the space or the institutions in the space want that. I think they want to keep on taking easy retail money, which is what they're good at doing, which they've proven they can do over the last year. And for me, what I think they'll be looking to do now is trying to, after sufficiently spooking the market and shaking this market out, will be to run things here, maybe a little bit of resistance, get people worried that actually, yeah, we are going bearish and we might do this, only to run us higher, which I think most people won't be expecting, because there's going to be a lot of people that have been spooked by this market over the last couple of months that want to get out here, because we've had no, aside from this, we've had no real proper bouncing opportunities to get out. So yeah, I think a lot of people, if we do get a bounce in here, will be thinking that, okay, if we do come off, we're going to go back down, and maybe we hold this channel and then go up, or maybe we get a little bit of resistance and then we break on up. Yeah, I mean, I'm not trying to sound like a perma bull, but I do think the Fed have to do something. I think they absolutely have to do something, and for me, I think they will do something. I don't think. Okay, I'm going to say this. I don't think we're going to see a multi-month bear market for Bitcoin this year. Okay, that's me on record saying it. So I think even if we get down to these levels, I think the Fed will have to come in and support stocks. And once they do that, we're going to see a rip higher. I'm still leaning to Bitcoin breaking all-time highs this year. I think when you step back and when you look at this rationally, and you look at the development and the growth and the interest in the space and all the great things that are happening with MFTs and the metaverse, I just think, store value and corporates are adopting balance sheet strategies with Bitcoin involved, and institutions. We also have the card that I haven't mentioned yet in this video, is yet to be played, and that is this Bitcoin ETF card. I mean, I know a lot of people talk about it, and a lot of people, sort of say it for hopium, but when that is approved, and I do think it will be approved under Gary Gensler, when that is approved, we are going to see this market take off. And for me, it's something you can lean into. It's not financial advice at all, but I'm happy to put some of the money that I sold. I mean, I sold a tiny bit on the way down. I'm happy to put a little bit of money back to work here on this 100-week moving average on this trend line. I'm happy to do it because I know that at some point that ETF approval will happen and we'll start to go higher. So I can lean into that. Likewise, if we come down here, I can lean into it. I know at some point the Fed will reverse what they're doing, and ETF's going to get approved. There's things I can lean into. So you got to approach this from a mindset. I mean, I've had to have a real talking to myself over the last few days about sort of taking profits better. But I suck at taking profits, but at the same time, I'm very, very good at buying dips, and I'm very good at positioning and DCA and getting in. I mean, my average entries into crypto are great, and even throughout this year, I mean, this is the first time I've been really wrong on the market. Even up here, I was scaling out. I was nervous. Here, I was scaling back in. I just got the last couple of months just took my eye off the ball. But I really, what else? What else did I want to show you? I mean, this where's the funding? Right, let's just take this. I mean, this is the BitMEX funding rate. I mean, for me, it's got no value anymore. It's just been printing negative ever since here, and it's not really helped us out. So, I don't know if anyone even cares about BitMEX, uses BitMEX anymore. I certainly don't. If we just look at the RSI, let's bang that on there. I mean, daily RSI, okay. So its lowest levels. I mean, it's lower than here. I mean, it's its lowest level since March 2020, when we saw the COVID crash. Okay. So basically, is that the end? Yeah. This is pretty much our bear market. No, it wasn't. Where's our bear market lows? Freak out. Yeah, this is our bear market lows. So we have been lower at the end of the last bear market. But before that, did we actually get oversold here? So a little look. No, I mean, we're at lower levels than we were for the most part of that bear market until we actually capitulated. So if you're saying this is capitulation, well, what's this? Most people say this is capitulation. Is this not capitulation? I mean, I won't even get started on altcoins, because altcoins are just a complete state. But let's have a little looky at a few altcoins. We got Ethereum. Ethereum, I think, has got a similar setup to Bitcoin right now. If we just look at Ethereum on the weekly, it's probably a little bit easier. Yeah, I mean, it's a similar setup. Potentially in this channel, we've got the 100 moving average for Ethereum coming in a little bit lower. So unlike Bitcoin, it's testing it right now, Ethereum's relatively stronger. It's not actually pulled back quite as hard. 52%. Actually, I think it probably has now. Yeah, 49% down. And Ethereum. Yeah, so Ethereum was doing a little bit better, Bitcoin relatively, but it's actually started to drop down further now. Yeah, I mean, looking at Ethereum, it looks like it's coming into a key level soon. And like I say, potentially we get a reaction over the next few days from the Fed. We come back down a little bit lower, and then we start to bounce. You know, if the Fed does come out with something sort of positive for markets. So yeah, we could see that. Link's one that I've been interested in, that I've been sort of scaling into over the last few days. It's just yeah, just not pretty. DOT as well. DOT's actually already touched that trend line. So, you know, for me, I'm a buyer. I'm a buyer at these levels on these coins. ADA, another popular one as well, it's come back down to its 100-week moving average. So, yeah, I mean, there's lots there to digest, but I just think we're going to see some response in the next few days from the Fed to what's going on. And, you know, for me, that's going to dictate as to whether we go a bit lower first or whether we get a sharp recovery. And another reason I think this is just because the last time we came down and had the crash, we stayed here for a number of weeks. I don't think people are expecting a V-shaped recovery. You know, crypto used to do them fairly often, hasn't done one for a while. So yeah, but it all comes back down to what the Fed's going to say and what Jerome Powell's going to say and the Fed's going to do. So yeah, sit tight. It's going to be probably a tough few days. Next week's probably going to be a very, very volatile week. But yeah, this is these are my current thoughts. I do think we will recover. I think when you zoom out, like take a step back, zoom out, big picture, long term, we are going higher. There's only 21 million BTC. Don't forget that. So don't let them take your crypto. Stay strong. So, honestly, it's not financial advice. Do what you want. You know, if you want to sell. If you want to hold. But I just mean, you know, long term. I've shown you where the daily RSI is. I mean, if you'd sold any other time when the RSI had been at these levels or lower, then they were literally the worst times you could have sold Bitcoin. Literally the worst times. And probably the worst times you could have sold altcoins as well. So I think the key thing to do here is just step back and think about it rationally. Take a few days, listen to some people in the space, try and get a picture of what you want to do. For me, like I say, I'm a buyer at these levels where we are here, even a little bit lower. Obviously, if the Fed doesn't reassure the markets and we see further volatility and a risk of things running further to the downside, I will be a buy here, because ultimately at some point, I do believe the Fed is going to pivot. And when they do, we will see most likely a V-shaped recovery, at least in stocks anyway. And I do think that will bode well for Bitcoin. And, you know, if an ETF, spot ETF approval goes through in the US anytime this year, that's going to take us to all-time highs. So, you know, nothing, I know we say this every time the Bitcoin price dips, but nothing's changed. Nothing has really changed from when we were up here to down here. Obviously, I think there was a little bit more confidence that maybe an ETF could have been approved last year up here. It didn't happen. And the only thing that has really changed is the Fed are saying they're going to slow down the printers and potentially, well, that they are going to increase rates 3 to 4 times this year. So the market's pricing that in, and if that doesn't happen, then the markets are going to go up. This is just, yeah. I say it's not financial advice, but before you think about selling here, you start worrying, saying we're going to go back down to like, I've heard calls for like 10K, 7K. It's just a long way away, and there's every opportunity for the price to bounce over the next few days. And when it does bounce, I do think it'll bounce hard this time. So yeah, watch this space. I don't think this bull run's done yet. I really don't think this bull run's done yet. I think we got a way to go. We're very early on still, like, overall in the space, and yeah, I don't think the Fed will sacrifice the economy to fight inflation. I think if they can, I think if they can do it softer and more slowly, I think they will do. And don't get me wrong, maybe that doesn't stop inflation, and maybe inflation does run hot for a bit longer than they want to, maybe throughout this year, and maybe towards the middle of the year, midterm elections, maybe they come out and they start to fight it harder then, and then we get more of a sustained sell-off, and we could go into bear markets in stocks and in crypto as well. But I don't think they would just force it. I don't think they would be that stubborn that soon, if you know what I'm saying. Eventually, maybe they will be, because eventually they might say to themselves, "This is the only way out," and that could be a serious bear market, probably cause the next bear market for crypto, which does see us coming back down and testing its 200-week moving average, and does see more of a sell-off in stocks. And maybe that is eventually the way we get out of this, with high inflation. Maybe that's the only thing they can do. But I think that's more of a last resort rather than a preferred sort of first position. Which, let's be honest, this is the first position of the Fed to fight inflation. 3 to 4 rate hikes this year, and see where it goes. Well, I think the market's now starting to price in, very sort of aggressive measures probably on top of that, because maybe they're thinking, well, we know that won't be enough. But obviously, if the Fed does climb down from their stance, we could see a nice relief bounce. And, never underestimate the moves that this market can make in a short period of time. I mean, this sell-off, it's taken 10 weeks. Do you know what I mean? This rally, 17 weeks. Okay. So, let's say a little bit hoping they do pivot. 17 weeks. Okay. We're looking at May. Yeah. We're looking at May. And then you've got midterm elections coming up. And we know that institutional investors, they like to sell positions in May, right? So sell in May and go away. So, potentially it happens sooner. We get up here, we blast off, and we all we get to 100K, and we all ride off into the sunset in our Lambos. Who knows? But yeah, the key takeaway is don't panic. And I think on that note, I will leave it there. I've rambled plenty. So yeah, I'll try and get better at this. I'm going to jump back on a stream probably over the next few days, probably after the Fed decision, and do a further update with what's going on. And yeah, we'll leave it there. If you do enjoy the content, please do like, share, subscribe. It goes without saying. Leave a comment, interact, help grow the channel for me. That'd be much appreciated. And I will catch you soon.